The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. We're going to have Rich Anderson from Anderson Capital Management on the show at the half hour, and we'll be talking about the grain markets. But I wanted to start out today's show with the gold market because since we made our bottom back on the 15th of April, we've had a $160 rally. We've only been able to back off about $40 of that so far. I posted into Tiger TV the 30-minute chart for gold, and it looks like we're forming a potential AB equals CD down at the $1,430 per ounce level, which would be a 382 of that move. So that's really what we'll be looking. I'll put the gold chart in here in just a second. I wanted to do two things. I posted the cotton chart first because someone had a request for it, and I forgot that I had posted that in there. But I will do that. But before I do that, I wanted to put in the gold bug index. This is the HUI, and I wanted to bring this to your attention because we have something really big happening in the financial markets. Listening to Basil's show, I was just totally amazed at how quickly he's raising his stops on all his long and how cautious he's becoming. He really is a master technician, in my opinion. I respect his work as much as anyone as I've ever seen in this business of 54 years experience, and he is really very, very good at what he does. And the reason why I say that is that we have some life-changing patterns before us, my friends. We're going to be talking about those a little bit over the next few days because I think we're at a more critical junction now than we were on May the 5th of 2009. This is going to be very interesting what happens. But with this gold bug index, we were making this 135 reverse point wave pattern back in August of 2011 when gold was hitting $1,932 an ounce. And now this index stopped exactly at the 786 2 weeks in a row back in April. And we have had that level hold, and it's so far had a 10% move. We've moved from 260 up to the 290 level. So I think it has a chance to go a great deal higher. The reason why I bring this up is I think we've made a very significant possible bottom, and I say possible because if this thing fails, it's going to go a lot lower. But there's a very strong probability that we've made a very significant bottom in the gold market. That's what it looks like to me. I think it has a potential as good as anything I've seen in quite some time. I want to go in and just to show you what I'm looking at here as far as this 440 level in the gold because it's got a chance to make that without too much trouble. It would be nothing more than a larger, ABCD pattern forming, and we'll put this in and let you take a look at it because if we get down to around 1,400 and 1,410, that would be the big move to the downside in gold, where I think we'd be looking at it somewhere between 1,410 and 1,385 per ounce. I think that gold has a chance, if it can get there, it would be a good buying opportunity for the long-term basis. Now, the silver chart is totally different. It doesn't have the same characteristics as gold because silver is more of an industrial metal than a precious metal. It's the poor man's gold, and I don't believe that it has the same potential for a move. That doesn't mean it can't have a tremendous rally, like everything else. But if you'll take a chance to look at the gold-silver chart that is going to be in the Tiger TV it's an hourly basis. It shows that the silver is holding up okay, but the gold is by far the strongest. It's had a much, much stronger rally, and silver has not been able to do that. We need to get silver above $25 an ounce. It's at 23.80 right now, and so that's that's the reason of what we're looking at here with the gold and silver. Copper's had a pretty good rally here. We rallied about 10% in value in copper from 303 to 336 a pound in copper, and that should be the end of that rally. In copper, it's up 8 days in a row, and we've had lower highs. It's been very, very bearish, in the copper. So we need to watch that because it's, I think, relatively important. But the gold has my attention because it's got a chance, to really be a monster. Now, the other alternative in gold is that gold doesn't correct any more than we've already done. In other words, only corrects $40, and if we get above the $1,490 an ounce now, that to me would say, because it's taken 5 days for this thing to go sideways from 1480, down to 1440 and change, that $48 has basically gone sideways. And if that's all the correction you're going to get, that's not even a 382 correction, and the market explodes out of here, like 1490, 1500, then it can really have a tremendous move. And you remember, gold was very, very oversold when it got down to that 1322 level when it was making the long-term weekly ABCD. And so this is a possibility of something, I'm not saying it's going to happen, but, we thought it was going to break. It did. It broke hard. That part was good. And now we're hitting a spot where, it doesn't give us a chance to buy it very easily. I mean, it won't back off very much. And that usually is a very positive sign for a market. And gold is very emotional market. But believe me, I've been involved with that emotion, so I know for a fact what that's like. So we have to, remember that when we're trading, the gold. I think it's, very, very important to understand, what we're looking at. We're getting ready to come into the grain markets here. I wanted to change the subject here for just a second. I want to move over to to something I see happening in some of these markets that I'm watching right now on all these indices, because boy, I have not seen something like this since March of 2009. We've completed a major ABCD pattern in the Dow Jones transportation. I know it's not a commodity, but it all fits together. They have to move commodities, through the rail and trucking system, so that's going to be affected also. So we have a big pattern that had just completed on the daily chart in the Dow Jones transportation. I'm sorry, folks, but I have to show you this chart. One of my colleagues, Jim Bartolioni, who's one of the traders in the hedge fund that I work with, sent this chart to me today, and it is probably one of the most amazing charts that you'll see. It takes the Dow on a log basis going back, many, many years, well over 100 years. I'm going to put this in here because it shows the big five-wave reversal pattern that we have going in right now. And the thing to keep in mind is if you'll look at that 61% retracement from March of 2009, that's when, I wrote the letter that day. I said, that weekly letter said, this is the point of no return. The market stops right here, or, we're going to be looking at oblivion. And in fact, that's the new Tom Cruise movie. But we've rallied. We made new highs. I knew it was going to be the biggest short covering rally the market had ever seen, but I didn't think we would be able to make new highs. And that's exactly what we're doing. And now we are making a expansion number up here in the Dow Jones, up around this 15,280 level. So we are getting ready for a major reversal in the stock market, and we have a lot of astrological things coming in over the weekend. I know we have a solar eclipse and a new moon coming in on the 10th. That's tomorrow, and so we got the weekend. We got the 11th, 12th, and we come in on the 13th of May. We are going to be looking at something really, really exciting. Also, it's a Fibonacci day. That's the National Fibonacci Day. It's 5-13-13. It's celebrated by all Fibonacci traders all across the world. So just remember to send some flowers to someone that is looking at Fibonacci numbers. So we'll watch that. There's some longer term charts that I need to I hate to get. I should save this for Monday, but it's so important because I think we're over something that is just really amazing. One of my good friends, Rick LaRusso, who does the technical analysis for one of the very large banks in the world, sent me this chart. He does a lot of timing with the S&P, and since we're looking at Fibonacci numbers, 5813 was also that was the mini Fibonacci day. That was prepare you for 51313. And then we also have another one on 52113. So this is really a big Fibonacci month for us. Of course, we'll have some in August too when we hit the 8. But if you'll take a look at the timing of the stock market, what we're looking at right now, we are watching an incredible pattern unfolding here. And it is really it's a longer-term pattern. It goes back, weeks and weeks. But it tells you that the timing tells us that we're in the week of this time zone. It's 233, which is one of the Fibonacci numbers. If you take 144 and add 89 to it, that gives you 233. You also have 144. You also have 72. And then you also have 89, all coming together at this week. And it's coming at an astrological time, which doesn't surprise me because these astro numbers, come from the Fibonacci the sequences themselves. On Monday's show, I'm going to share all of these patterns on a basis. I want to do a couple of the foreign markets today, but I've been preparing this for quite some time, getting ready for my webinar, which is going to be on Wednesday at 6:30 for all of my subscribers to the newsletter. If you subscribe to the newsletter, you'll be able to get to the webinar free, and I'm going to be discussing what I see are major things that are happening right now, and I think some of these have a chance to make a lot of money, and you don't have to have a lot of money to really take advantage of it. If you like the Apple trade, I think you're going to love some of these that we have coming up because it's going to catch some people by surprise if it's correct. Now, it has nothing to do with fundamentals. I don't know anything about earnings or anything like that. I'm just looking at the patterns that are expanding. That's all I'm looking at. And we're seeing them all over the world, folks. They're just it's not just the United States. They're coming, from France. They're coming from, just about everywhere. It's truly amazing, how they're fitting together. I'm going to put the one from the CAC, which is the French index, and you'll see that it also is making that 135 broadening triangle, also known as the reverse point wave. This was in Gartley's book known as the T6 pattern. Wells Wilder turned the T6 pattern into a trading system and sold it to 1,000 people at $2,500 a piece in the early 90s. And the pattern does work. It's very, very unusual, but it does work. We've got to take a break here, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we've got our call from one of our favorite people, John in Philadelphia. Are you there, John?
Hello, Larry. Good day to you, sir.
Good day to you. What do you got for us today, my friend?
Larry, I'm the one who's interested in the cotton market. I wanted to first tell you that, of course, cotton back in 2011 screamed up and made a panic peak over $2 a pound, and made a low last summer at 61 cents a pound, and recently has bounced into a peak, 1st of March, just under 94 cents. It looks to me like the rally from last summer looks like it's a clean AB equals CD pattern, and if we have normal weather, I'm thinking we'd have the fundamental driver, a supply-driven bear market, to drive the price of cotton back to that 60-cent level. So that's kind of what I'm thinking. Wanted to ask, technically, using your Pesavento patterns, what you see.
Well, I think you have it spot on, John. You know, we had that, peak that made that parabolic move, and we always know that how they end parabolic moves. It ended like it should have. It, lost better than 75% of its value, and then we had this very shallow rally back, and I think you're right about this 94 cents a pound. It looks like that's, it's been a significant top, and it does look like it's ready to go back and test the 60 cents a pound level again. That's what it looks like to me. I do not trade cotton. It's one of the few commodities I don't trade. There's a few softs. I don't trade cotton and orange juice. I will trade cocoa maybe once a year, but I don't trade cotton or orange juice. They're just from some bad experiences from the 1970s. That's the first time I looked at a cotton chart in probably a year today, John, but I do see the pattern that you're looking at, and that's what it looks like.
Very good, Larry. I appreciate that. I will ask you as a follow-up, if you would just bring up the subject of that market, supply-demand-wise, when you speak to Rich later today.
Yeah, he'll be on at the half hour, and I'll be happy to bring it up. He doesn't grow cotton. He is basic. He does wheat and barley, and he has they have a cattle ranch, but I'm sure he doesn't have any cotton. They don't grow that in South Dakota. So,
No.
but I will. He knows the dealers, though. I mean, he knew Eli Tellis, the great cotton trader that trained Paul Tudor Jones. So, he knows the people in the business. So we'll ask him about it because it's interrelated with corn and soybeans.
Yes, thank you. I will tell you lastly, just for your listeners, there is an ETF with ticker symbol BAL for Bale.
Mm-hmm.
That it's an ETF. It is essentially just a wrapper around cotton futures. So you can actually use your stock account to both buy and short cotton via that ETF.
Does it have much volume at all?
Larry, it doesn't have big volume, but it tracks very, very well. I've used it previously myself, so I can at least tell you that.
Okay. All right, John, listen, thanks for calling in, my friend. I certainly appreciate it.
Thank you, Larry.
You bet. That, my friends, is one of the smartest people that have ever called into this radio station. I happen to know him, and he's really an incredible technician, so my hat's off to him. The only thing is I remember what my grandma told me when it was when we had this session about cotton. I was about 8 years old, and she was telling me about different things, and we got to cotton. She said, now, when you have the urge to trade cotton, she said, go over on the couch and lay down until the urge grows away. Actually, the reason why I don't trade cotton, folks, is in 1974 when the market was going up, I had a bunch of contracts on. I tried to get out, and it was limit down, and the broker yelled, you want out or not? And it was limit down, and my broker was shaking his head yes, and so I got out, limit down. And sure enough, they went limit 5 days in a row. They would have been against me, but the market was limit bid to limit down, and it was just crazy. And since that time, I have never traded cotton, and that's the first time I've looked at a cotton chart in well over a year. There's just too many wonderful other things to trade. I mean, it's just really, you've got Forex, you've got grains, you've got gold, crude oil, stock indices, bonds. Bonds is an incredible thing to trade. So all of these things make it difficult for me to trade cotton. It does trade electronically, so that's much better than it used to be, but that's the bottom line. We're going to have Rich on at the half hour. We want to start with the wheat market because the wheat market is really moving today. It's up about 20 cents a bushel, and we want to get Rich's point of view. He'll be on at the break. 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position at Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, good afternoon, folks. I think we have Rich Anderson on from Anderson Capital Management. Rich, are you there?
Yeah, hi, Larry. How you doing?
Pretty good. Someone asked a question about cotton. Do you have any contacts or any opinion on cotton, Rich?
Well, the weather has influenced the cotton, and it's been a friendly market. It's not a market I trade a lot of, but I actually do have a friend that follows it rather closely, and the fundamentals are real positive right now for it. But you can see that reflected in the price, and wouldn't be at all surprised to see it test the highs. The sell-off that we saw in cotton earlier in the year was on weakness in China, and China seems to have stabilized, although the export numbers that they showed yesterday, some people are questioning whether they're real or not. But the bottom line is China seems to have stabilized, and their inflation rate today seems to have picked up. And so if their economy is going to be going along at 7.5% growth rate, then we've got a place to sell it. And the acreage has come down some, and the weather hasn't been favorable, and so all that adds to higher prices.
That all relates back to the grain markets, wheat and corn and beans.
Wheat and corn.
Rich,
Yeah,
why is the wheat market so strong today? Really is up around 20 cents a bushel, I believe. That's a pretty big move.
Right. The guys are starting to realize now. Chicago's up, is leading the pack because that's where the speculators are. But it's really been the hard red wheat down in Kansas, Oklahoma, where we've
seen the frost damage in the last 2-3 weeks, and people are starting to realize that, the damage actually was consequential and significant, and that's what's going on there. In the corn and the beans, it's more about the cash markets. I mean, they're paying in Moline, they're paying $1.05 over. In Central Illinois, they're paying $1.35 over for soybeans.
Wow.
So that's cash money they're paying for those soybeans.
That means demand is very strong. Is that correct? I mean, that's the cash. They want cash beans right now.
I had dinner with a processor, a crusher Thursday night, and he said he paid $1.10 over for soybeans last week, and he had 85-cent margin in those beans, even paying $1, 10, 12 over.
So he still had a big profit, even though he had to pay up for it.
Yeah, huge profit. And
wow, that is a lot of money for soybeans.
Ethanol production has slowed down some, but in order, for the USDA numbers to work out, it's got to continue to slow down. And while they don't have the margins they had 2-3 weeks ago, they still got decent margins. The bottom line is the old crop stuff is as tighter than what the government would like you to believe, and in the cash market's the real situation. If it's not there, it's not there, and the basis is what has been showing you that it's not there. Now tomorrow's report, maybe the government will start to acknowledge that the March report, where they gave us 400 million bushels of corn, was maybe a bit too much. They took 120 away on the last report. Maybe they'll take a few more away. The June reports where I expect there could really be a surprise. But the other thing is we're not getting this. The wheat is already planted, other than the spring wheat up in Minnesota and North and South Dakota. But the corn and beans aren't getting planted very fast. Next Monday's number is going to be terrible. The May 20th number, it always comes out on a Monday. We need to have 60% of the corn crop planted, or it's a serious situation. Nowadays, the farmer only plants if they have insurance. In South Dakota on our farm, May 25th, after that, you get declining amounts of insurance. The guy that's farming for me this year is in Iowa. In fact, he was in my office today because it's wet in both places and he can't do any work. In Iowa, it's May 31st, so the clock's ticking. Now, after this moisture moves through, it's going to clear up, but it's going to be like 37 on Friday, and then it'll move up into the 70s here in Minnesota. We need those warm temperatures, and you don't want to plant in the mud. You plant in the mud, you get a dud. You need the soft, warm soil to really make the seed germinate and things start to grow. Oh, that's the other thing I've heard, is that because of the crop problems with the corn last year, our seed corn this year, the germination isn't as high as normal. Normally you plant for every 100 kernels of corn, you might get 96 of them to germinate. This year, because of the stress that it undergoes in the growing season last year, might only be in the 80s. I think that could be something that they'll talk about in the fall.
Rich, last year we were talking about the potential of a drought back in May around this time.
Right.
And, that turned out to be pretty good. We were, following it around now. We hit some major support in some of these, contracts of corn yesterday and today. So do you think that the bottom is in corn, or that people that wanted to get into the farming business via futures would just come in and buy December corn today at around $5.40 a bushel, or should they wait?
Well, we sold off last night to $5.25 3/4 on some weather news, and now we're back up to $5.40. It looks to me like new crop, and that's what your question's on, is a maybe a $5.20 to $5.70 market. We're a long ways from a drought. Right now, it's more concerned about can we get it planted. With the big machinery, the answer is we will get it planted. It's just going to be late. And every day after May 15th, that's one less growing day, and so that makes your potential yield go down. Let's say your potential yield in Iowa was 200 bushels, and then you plant 2 or 3 days later, it's maybe only 190. So the USDA, I think by the June report at the latest, not only instead of 97 million acres, may only be 95 million acres, but instead of 165 bushel average yield, may only be 162. And we haven't even started to factor in any possible stress from drought or anything like that. I think the market's telling you that we're at a level where there's some underlying demand at the moment, and we have to have a perfect growing season, and then we could have much cheaper prices in the fall. But in between now and then,
a lot of things can happen.
The corn, the peak moisture need is the middle of July, when it needs almost a half an inch a day. And so between now and the middle of July, there's a lot of uncertainty, and I don't know that there's been any weather premium put into that market yet, and that's what you're really talking about. I think the market's going to start to accumulate some weather premium at some point, and that's what will raise prices. That does year after year if that's the seasonal.
Rich, we've been doing this so long. It's the same thing every year. There's always at least one crop scare, isn't there?
Oh, absolutely. Now, I'm not saying that we're going to have the range. Last year's range in corn was $2.92 between the high price and the low price of different months for the year. I'm not saying we're going to have that, but 75 cents to a dollar is, can easily happen. So we could easily see $6.50 at some point if there's any weather concerns whatsoever. And we have.
Rich, you can remember back when corn used to have a weekly range of a nickel. Remember? 5 cents?
I know. Shoot, you'd have a 10, 15 cent range for the year.
Yes, I know. The volatility we have now is amazing because we're trying to basically feed the world. That's for sure. What's your feeling on the soybean market?
Well, the primary reason that the cash prices are so high is because down in Brazil they had a bumper crop, but the ports, can only load so fast. And if it's a rainy day, they can't load in the rain because they don't have, it's not covered and all that. So they still have a huge line of ships waiting to be loaded. Eventually that line of ships will get cleared, and the rest of the world will start to take all their beans from South America. But in the meantime, the people in the U.S., the processors in the U.S. that take a bushel of beans and crush it into soybean oil and meal, they need that meal. The same guy I was talking about, he sold meal, it made $12 a ton profit to another processor because that processor couldn't get the beans to produce the meal themselves. So there's real demand for this stuff to feed the animals and demand for the beans to make the meal to feed the animals.
Okay, Rich, listen, thanks for coming on the show today, and we'll have you on in the very near future. How's that?
Good. Now, I'll send you a little information on the cotton market so you can read up on it.
Okay, that sounds really good.
All right, thanks.
Okay.
Bye.
I posted that was Rich Anderson of Anderson Capital Management. I've known Rich for just about 35 years. Anyway, I posted into Tiger TV the soybeans chart on the daily basis, and as you can see, if you take a look from the 2012 low to where we've come in now, we've hit the 61% retracement several times now, which just tells us we have good support in here. We're having a pretty strong day for all of the reasons that Rich was talking about when he was on the air. So that's something that that we'll be keeping an eye on over the next few weeks to see if what the market's going to do. I'm getting relatively bullish on the corn today because of the way that it made that bottom today, and it looks like it has the potential to go a great deal higher. So we just keep it on our radar. That's really what we want to be doing. Now, last week we talked about the sugar market, and I wanted to share some interesting timing stuff that was done by our friend Rick LaRusso. Rick is with Morgan Stanley as a chief analyst, and it shows some more of these cycles that are due, and many of them are coming to due last week when we were watching the sugar market. And we've had a small move in the sugar market, but nothing really super dramatic as yet. But at least it's raised its head and is looking like it wants to at least give a small semblance of some type of a bottom that's coming in here, because we were watching this 3 drive to a bottom pattern that is formed, and we had a pretty good move up into the about $700-800 on the upside. Now we're backing off at the same time, so it's still holding the low at that 1720. per pound, and that's, pretty much, what we're looking at. When someone asks the question of do I trade sugar maybe once or twice a year. I'm not in it right now. I'm focused mainly, on getting ready for this move I see coming in the stock market. I trade the currencies all the time. I trade gold at least once a day, sometimes more, and I trade crude oil about 3 days a week, and I trade bonds or notes just about every day. And I'm looking at swings anywhere from a daily to an hourly to 30-minute to try to select the ones that I'm trying to watch. Quite a few weeks ago, we were looking at the cattle market, and we had this beautiful butterfly three drive to a bottom pattern forming in the cattle market. The June cattle went down exactly where they should have, and then they've had a big move to the upside, and now we're testing that bottom again. So this testing at the 120 level in June cattle is very, very important because we're at a level that it must hold this level. Otherwise, we'd be breaking down. We could go down as low as the 117 level. The hog market has been under a great deal of pressure, and so that leads, usually that hogs and cattle go together because, they can be substituted, red meat or white meat. So that's what we're looking at. We don't have chicken futures. We used to have many years ago, but I think it was because of the bird flu or something back in the early 70s that we lost our, chicken contract. It never was very popular, but, they did trade it, for some time. I wanted to mention the rice market. That's the biggest, food supplement in the world. It's the biggest food in the world because so many people use it. We've been in this really, really strong trending, strong trading band between 1620 to 1380 in rice, and rice has held up. We've had some higher bottoms now. The last high that we made took out the old high, and then the market pulled back to a 61% retracement, and then it tested it again just about 2 weeks ago, and so that's telling us that we're looking at potentially higher prices in rice. The good part about this picture of rice, if you go into Tiger TV, you'll see that it makes an incredibly beautiful head and shoulders pattern during the summer of 2011. We were pointing that out to the listeners at that time because this is the chart that I had from that level, and all I've done is refreshed it and bring it up to date, tell us that we're pretty much in the same zone as where we are before. Like Rich said, these they can still get the corn in. It has to go in usually by the 1st of June, otherwise things are going to get pretty nasty. The corn has to have so many days for germination, and so the contract that you would be watching would be December corn. We have December corn trading at around $5.40 a bushel, and May corn, that spot corn that they're using right now, is trading at around $6.50 a bushel. So there's about a $1 bushel difference between the two, which is telling you there's very strong demand for corn. So if anything goes wrong with the crop, that December corn could catch up with the other one just on a regular, supply-demand basis. We're going to take a break. 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we've got a few more minutes here, and I wanted to go through the market that we really have on our radar, and that's the bond market, because I think that is the one that's going to be the real surprise, that interest rates are going to go higher, and that we are getting ready for something, very, very significant to occur here. The interesting part about the Treasury bonds is during this last run-up in the stock market, the bonds have held up incredibly well. In other words, after we made that low down at that 142 level, we rallied up to almost our sell point at the 150, and then we backed off to 146. And that 146 level was a perfect 382 retracement off of the last low. I posted that into Tiger TV so you could take a look at it. But that's what it looks like, is that it's setting up very nicely, because if the stock market starts to roll over like we think it can, that could bring one more flight to quality into the bond market and note market, and that could be the one that takes it up into new high ground, looking like interest rates are going to go to zero, which pretty much that's what the Fed has done in QE2, 1, and 3. And that would be the wrong thing to do. So it's a big double-edged sword coming in here, in my opinion. So we'll see. And believe me, that's just my opinion. It could not work. It certainly do that. But I like the bond trade very well if we can get them sharply higher here in the next couple of weeks. If the stock market does start to roll over, there's not much of a a window here in the stock market to be wrong. In other words, if the stock market is up strong next week and closes strong next week, then there's something, dramatically wrong. It should top somewhere between today and Monday at the very latest if these astro things are working, because we have the trigger mechanism of the new moon and solar eclipse coming in on Friday, and then we have 6 of the major things that are occurring in the stock market on an astroharmonic basis that are hitting, and that also makes it interesting. The chart that I posted earlier about the Fibonacci expansions and contractions that are there, showing the number sequences from old highs and lows and how they all come together. Well, not all of them, but many of them come together on this May 10th level is also, I think, relatively important. This is what we're looking at, and only the market will be able to tell us if we're right or not. Now, the Treasury notes have been, they've been actually, they trade about 3 times the volume of the Treasury bonds, because the notes are where they get the credit card rates from, the interest rates on credit cards, and also on our mortgage comes from the rate on the 10-year bond. That 10-year bond rate right now is about 1.8%. In 1980, when this market started its bull run, that was trading at around 13%. And so things have changed a lot since 1980. And I think we're getting ready for something really monumental here, just looking at all of these patterns on the stock indices and all the other things together. It's starting to paint a little bit of picture here that maybe the Federal Reserve has done something that they're going to have a hard time getting out of. That's what I think could possibly be the reason for this occurring. But I'm not sure yet, and I don't care what the reason's going to be. I'm just looking at the pattern, and the pattern is telling me you do not want to be long stocks here. And I'm doing the same preaching that I did on May the 9th of 2009. So this is just a monster pattern that is occurring in all. It's not just the U.S. It's in Germany. It's in France. It's just really London. It's just and Asia has already topped. They dropped in 2006. They've been bear markets, for a very long period of time. So Monday's show is going to be focusing on, where we are with the stock indices, both domestically and also in Europe, to see if this date that we have coming in is going to be a tradable date, or the market's just going to keep going. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.